Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minutes futures for the session of 11th of September. In this video, I am going to show you the market recap from yesterday and also a trade review in the 3 minutes time frame, which I will include the entry, the exits, and also the rationale behind. And I will explain a bit more on how I actually trade the trend reversal with a high winning rate, and also with the logic behind and why it will work. So during the trade review section, so do remember to pay attention to that. And also going forward, I will also cover the bias, the key levels that I'm watching, and also my trading plan for the session later. Alright, so let's just get started. As we can see in this daily chart, so yesterday we have another reaction. So we have another reaction here with a slightly increasing of the supply, but comparing to the prior day, the 2 days ago, so supply has been decreasing a little bit here. And if we just take a look in the hourly time frame, let me just quickly show you how I actually interpret yesterday's reaction. If you recall in my video yesterday, I do talk about possible shortening of the downward thrust. So this is the downward thrust and it's getting shorter, and we have a greatest rally. This is the greatest rally that we have ever seen out from this downtrend. So I think we have a chance for the bull to continue, but I also do mention that if we have seen another reaction, even it could just go below this previous low, and as long as that it can show that it still has a bit of the shortening of the thrust, then we can at least to conclude that the whole downtrend is exhausted. But we haven't actually reached that stage, so I think tonight's action will be very important because we can actually see how it actually have the continuation to the downside like this, or actually to reverse from here on to challenge higher swing highs, to test the swing highs levels, etc. Anyway, I will just elaborate a bit more in the later part of the section. But first of all, let me just take a look at what's happening yesterday. So yesterday we, prior to that, we have a good strong uptrend rally, and subsequently right after the end of the US session, we have this consolidation via this kind of the flagging pattern, and just prior to the opening, we have a rally. So the rally I think is stimulated by the initial jobless claim as well. So we see the rally carry on and tested the prior high, the prior swing high level. I think we did have a little bit of the up thrust. If not, it's just purely a test, but I think it's very close enough, and subsequently followed by the sell-off. So the real sell-off really begins at the last 2 hours bars. I think it's the 2 a.m. and also the 3 a.m. bar. So you can see that the supply has been increasing in these two candles in conjunction with the increasing of the supply. So the real selling happened during the last 2 hours, the 2 a.m. and also the 3 a.m. bar, these 2 hours. So let me just quickly show you the trade review. And what I would like to elaborate a bit more is how I actually trade the trend reversal, because this is actually my bread and butter trade. I trade this very frequently. Majority of my trades belongs to this kind of the trend reversal. So let me just walk you through step by step, and also how to actually increase the winning rate when trading this kind of the trend reversal. Alright, so before I do that, let me give you a bit of the context. So this is the prior session, the past session, the US session here. Subsequently, right after the ending of the US session, we have this kind of the downsloping consolidation. So that is the downsloping consolidation, and my trade actually happened somewhere around here, which is around 5 p.m. my time zone. So let me just walk you through here. So basically, I do talk about in my video yesterday to have a potential long entry when the price actually touches or tested, I think it's 33.75 to 33.80. So why this level? Let me just give you a bit of the context in the hourly time frame. So 33.73 and 33.80. All right, let me just quickly show you right here. So 33.75. So this is just somewhere around here. Yep. So I think this is 33.80. This is 33.80 here, and that is pretty much the swing high here. You can see that. So that is around 33.80. So that is just based on the candle swing high. So this is 33.80, and also I think we have this localized breakout. So this is somewhere around 33.73. So somewhere around this supporting area could become the long entry, as long as we see some kind of the bounce up from this area. Means that the area is providing some kind of the support. All right, so let me get back to the smaller time frame, the trading time frame in 3 minutes. So let me drag this a bit further. Alright, so you can see that the price actually touched this 33.75. So I think the context or the how you actually move towards the level is very important. So you can see that we have a descending wedge. So mainly is the shortening of the downward thrust. So we have this downward thrust here, and then followed by another commitment here. And then eventually you can see that the progress to the downside is getting shorter and shorter. So this just suggests that the down momentum is exhausted. So this is the meaning behind the descending wedge. So I'm sure that if you're a pattern trader, you know that descending wedge is bullish in nature. But the fundamental behind the descending wedge is actually the shortening of the downward thrust. So the progress is getting shorter, means that the momentum to the downside is getting exhausted. But having exhaustion of the down momentum is not enough, because just simply by having a descending wedge doesn't really guarantee you a strong rebound like this, because exhaustion of the momentum purely means that the price will not just keep moving down easily. It might just get into a consolidation via this kind of the trading range instead of reverse to the upside. So it is very important to have confirmation. So what I always do is to seek for changes and also confirmation. So first thing is that we notice that this is a shortening of the downward thrust, and means that the down momentum is exhausted. So this is the first change, down momentum is exhausted. And second, I would like to seek confirmation to show the evidence that we have quality demand come in. So here comes the demand, and we have this kind of the sign of strength rally, and this is by far the greatest up wave that we have ever seen, even count from here or here. So mainly I just take this descending wedge, and definitely this is the greatest rally. And if we just take a look at the volume here, it actually shows quite consistent demand and volume. So that actually just proves that we have a good demand in this rally. And subsequently, this is not even close yet, because by having a strong rally up doesn't really mean that it will just continue to the upside forever. So I always like to wait for a pullback. So here comes the pullback here. So the pullback actually just give the bear a chance to prove its worth. So if the supply is strong enough, then the pullback will be deep and actually maybe just touch the bottom or touch the low of this prior downtrend. If not, then like this, we can just notice that this kind of the reaction is relatively decent or shallow. So unlike we have seen it here, or even this big reaction here. So definitely in terms of the reaction is the shallow reaction, and in terms of the up wave is the strongest. So definitely we are in the sweet spot. So we give the bull a chance to prove its worth. Definitely it shows that this is the greatest up wave, and give the bear a chance to prove it. So it actually shows that, okay, I'm really exhausted, so not much supply here. In case you notice this spike of the volume, let's take a closer look here. So this is the hammer, so with a spike of the volume. So majority of the volume consisted of the demand. So if we just take this out, then definitely this reaction consists of relatively low supply if you compare it to the up wave volume here. So everything looks just so nice. So just right after the pullback, I just wait for a confirmation bar, which is this bullish bar, and act as a reversal bar. So right after the close of this bar, I just enter long, and with the anticipation to more upside, to at least test the high where the wedges form, and hopefully you can just challenge to 3400 level, somewhere around this region here. So this is a swing high resistance. But my way to manage the trade is to trail the stop so that I can protect my profits. So you can see that eventually I just got stopped out somewhere around here by this bearish bar. And I think this is quite a logical place to trail my stop, because I just trailed it somewhere here, and especially right after this bullish bar here with the spike of the volume. We know that it's entering into the overbought region. So overbought with the increasing of the volume together with the climatic run. So definitely I think this could be the end of the uptrend here. So I just trailed it somewhere around here. It's about halfway of the big candle, this bullish candle, and it just stopped me out with a reward to risk ratio of, I think it's around 2.5. So which is quite good for me. I'm very satisfied with a reward to risk ratio of 2.5, and within a relatively short period of time, from 5 p.m. to around 6:30 p.m. my time zone. Alright, so this is the only trade that I had during the London session. And during the US session, I think I did miss out quite a few trades because it's kind of late in my time zone here. So first of all, let me just quickly show you. So right after this reaction, we have seen the continuation to the upside, actually tested the previous day high. So the previous day high actually provided some kind of the resistance. If we just zoom in, I think we have a slight upthrust, temporary commit above this resistance and then just fall below. But it's not very obvious during this range, this small trading range. But what we can notice is definitely right after this two bearish bar, especially this one, with the spike of the 30k volume here. So this is very unusual. This kind of the high spike of the volume happened at around 10:45 my time zone PM. So definitely this is a sign of weakness, if this is not enough, then this whole downswing will definitely be the sign of weakness here. So I think if we can just catch this kind of the inability to rally, so this kind of the weak rally up, and then to short it somewhere around here right after the close of the bearish bar, then I think we could just easily ride a trend to at least somewhere around 33.75 or 33.80, where the prior which is the prior supporting level here. And if we just miss this move, then definitely we can just wait for this rally. So this rally is very interesting because it actually comes with a strong volume. So strong demand try to push the price up, yet it can't really commit above this supply bar here. So definitely a lot of the good demand here has been spent and was absorbed by the supply. So eventually we can see that it just commit one bar with a one bar committed above this supply bar here. So this is a big supply zone, supply bar, and eventually can definitely short right after the localized breakdown. So right after the close of this bearish bar could be a short entry. So quite a couple of the nice short entry here. So that's the possible trade here, and depending how you manage the trade, but at least I think we can definitely ride it to around 33.75 to 33.80. Alright, so this is the trade review for yesterday. Let me just get to the hourly time frame and let's talk more on the current market condition. Alright, so far we have a reaction yesterday, but by looking at the magnitude, we have this kind of the reaction is still forming a higher low. So we have a low here, another low here. So if this down wave acted as a spring, like a temporary commitment below the support level, and then followed by a reversal, and yesterday move could be a test of this spring, the move here, the down swing here. So we'll just need to see how it will perform for tonight, whether it will just continue to go down lower to create another lower low with a bit of the shortening of the trust as well to confirm that the exhaustion of the supply, and then followed by some meaningful rally up. Or we could have a straight up to just challenge the resistance again and see how it will go. So overall, I think tonight's action will be important. And for tonight's session, my trading plan was actually to just to monitor how it will go. First level to overcome definitely is the last hour bar here around 33.60. You can see that we have had 3 candles here, still haven't really penetrated through the levels, so it actually provided some kind of the resistance, and subsequent level will be around 33.80. So this is where the price break down and have the acceleration to the downside. So 33.80 and 33.60 are those 2 immediate resistance level that I'm watching. So if you can have some kind of the continuation to the upside, then that could become some kind of the long entry with this kind of the reversal. Otherwise, if it has a very bearish movement, like going down to test the previous swing low again, then this will be another chance to see whether it will just bounce or fail here. So either way it can be traded. Alright, this is the end of the video, and hope you enjoyed it and get something useful out from my video. If you like the video, just click like, and also do remember to subscribe to my YouTube channel so that you get instant notification of my future video ideas. As usual, if you have any kind of the comments, suggestions or trade ideas you'd like to share with me, feel free to comment it below. I will definitely reply to you. And thanks for watching. I will talk to you soon. Bye bye.